Welcome everybody to the 40 Finance channel. My name's Jeff Beers. Today I want to discuss a little bit about the risk of investing in small cap stocks during a recession. Obviously, a recession or a stock market crash brings risks alongside every potential investment. But for new or inexperienced investors, I want to call out some of the inherent risks with small caps, because as you see prices going down right now in the market, you're going to see a lot of small caps, particularly those with price points under $20. And you might say to yourself, that looks like a good deal, I can afford that. And on paper, it could actually still be a good deal. But don't go by price point, and make sure you examine these risks with the small cap stocks. And as always, make sure you do your own research, talk to a financial professional, don't make investing decisions that you don't understand. I make this channel simply for entertainment purposes. If you do like stock market analysis, investing ideas, and personal finance videos, then please subscribe to the 40 Finance channel. Thank you to everyone for all your support so far. All right, just to kick things off, make sure we're all on the same page. Just going to go to Investopedia and outline the exact definition for a small cap stock. And it's basically anything with a market cap below $2 billion. Technically between $300 million and $2 billion, because there's also micro caps as well. But long story short, it's a smaller company, certainly much smaller than you would see with the Amazons and Microsofts of the world. Almost every stock market website clearly displays the market cap of any individual stock. So if you're not sure, you can just go there and sort on the market capitalization, see if it falls below $2 billion. If it does, some of the warnings here could pertain to it. All right, the first concerning thing for me when it comes to small caps right now in this market is, generally speaking, they really haven't performed that well. And one way to judge small caps as a group is to go to the Russell 2000 index, which is indicated here by the purple line. I put it next to the NASDAQ index to just give us some sort of frame of reference. And the bottom line is the Russell 2000 hasn't been keeping pace anywhere close to the same pace as the NASDAQ. So even when we've had such bullish times over the past 4 or 5 years, small caps as a whole have not grown with the same market gains. As a matter of fact, after the most recent dips, if you were invested in the Russell 2000 index over the past 5 years, you're actually down 16% as of today. You compare that with the NASDAQ index, and you have a gain of plus 44% over that exact same time period. And the point here is just, even with all the news that's out there and all the concerns and fears, you're still doing okay in the NASDAQ. Granted, we may have future dips coming up, but Russell by itself has certainly not been a safety haven. Okay, so before I jump into the inherent risks of small cap stocks, particularly in this environment, I do want to call out some of the reasons that small cap stocks are attractive to investors. And the reason is, if you hit the right one or two or whatever field that you are focused on, small cap stocks can have an amazing gain. You can invest in, say, a small pharmaceutical company, and they come up with some sort of cure for a disease or an ailment. That stock can go from a dead last loser who hasn't generated any money to doubling, tripling, or more. Now, that sounds great, except I can tell you that the stock market, the folks who are in things like small cap pharmaceuticals, are super smart people. They have folks on medical research and analysis that we can't even fathom. They have ties to doctors, they have ties to clinical trials. And so if you're thinking about competing against them from your home, you better have some sort of inside track into information, or else you're always going to be behind. The bottom line is, though, the fortunes of a small cap company can literally change overnight, and that's for both the good and the bad. So I do want to call out that in this time of a potential recession, stock market crash, if you have strong conviction about a small cap stock and you've done your research and you think that it's a no-brainer, it doesn't mean you shouldn't invest in it. I would just make sure that you have a very safe percentage of your stock portfolio in something like that. It also doesn't mean that large cap or mega cap stocks are the safest play of all time either. We're in very hard times right now, but the one things that you can lean on with large cap and mega cap companies is typically they have huge amounts of cash flow. The best companies have huge amounts of cash reserves, and a lot of them offer dividends as well. So the risks of investing in something like a Google versus, let's just say, a small cap retailer of some kind is that very unlikely that Google's going to run out of money, okay? Now, the fortunes of their business could go down, but they have room and padding to handle some of these ups and downs. And when things do get on track, their business model has already proved across the test of time, right? You don't have to wonder, like, is Google's business model going to work when the clouds finally break in the storm we're in? However, on a small cap company, depending on who it is, they may have such a limited amount of data or limited amount of success with their business plan to date that you actually don't know if it's going to be relevant when the world returns back to normal. All right, so sticking with my Investopedia theme here, I'm going to call out the 4 risk factors that were featured in this Investopedia article here. How do the risks of large cap stocks differ from the risk of small cap stocks? And JB Maverick is the author here, and he outlines 4 reasons, which I'm about to jump into now. All right, the risk factor number 1 is that small cap stocks have less liquidity. And the risk here is if you go to buy or sell larger amounts of your small cap stock in times of panic and desperation, you may not be able to find a buyer. So let's just use the very extreme example that a company were to go bankrupt. It doesn't take a lot for a small cap stock to move, and so if everybody's selling out, you could very well have trouble filling your sell order because the price keeps dropping. Now that's very extreme and probably not the kind of thing that the average investor is going to see, but less liquidity is a problem and it is a risk factor when times get really bad. All right, factor number 2, in comparison to large cap companies, small cap firms generally have less access to capital and overall not as many financial resources. The bottom line is, if a big company goes to open another credit line or needs to sell some assets to pay the bills in the wake of a crash or recession, they have many more levers to pull than a small cap company. Small cap company may be down to their cash on hand. They could potentially sell some stock if they did any sort of buybacks. They could also sell patents and ideas, or they can have a sale on their goods. Most of their levers are limited if things get really tough. And from an employee standpoint, it can get even harder because they could have layoffs at any point, depending on how many payroll periods they can even afford to keep the ship afloat during bad times. Point number 3, I sort of discussed earlier, but the lack of operational history and the potential for a small cap stock's unproven business model to prove faulty. Things that were going well 2 years ago, let's say you were selling a certain kind of shoe or a medical instrument or tool or whatever it was that offered amazing value to the market 2 or 3 years ago. If the recession affects the marketability of that product or service, all of a sudden cash flows can go down significantly. And then you have the question, even if you survive, will the same product or service offer the same marketability when the world comes back out from under the rock? These are sort of unproven things that you often see with small caps because they haven't had a whole lot of business data through the ups and downs of a business life. And lastly, not as much information about small companies is commonly available to the public, and this makes an informed evaluation of small cap stocks more difficult for potential investors. I made the reference earlier about the pharmaceutical companies that you always see like on penny stock boards and whatever. You know, this particular ticker is got the cure for jock itch or something, whatever it is. You never have the inside track on a small cap company if you are just an everyday investor, okay? The games that go on behind the scenes make certain things look good when they're actually not, and then you get into situations where insiders, you know, buy huge amounts of stocks, and people, you know, get to learn about that before it actually happens. There's just a lot of wacky stuff with small caps that you should know could drastically inflate the value of your small cap stock, but it can also turn the other way. And the bottom line is getting that hardcore information about what is happening during this recession to my small cap company. You're going to have to dig. And it's not impossible to find these things, but if you are just going to be a passive investor and not keep up on stock market news every day, you're very likely to miss some of the key news that would influence you to buy or sell. If you are a new investor, an average investor, a passive investor, with all the storms going on in the sky right now in the stock market, my opinion is to stick with large mega cap companies that you can rely on to weather the storm. Even better if you get a dividend out of it. If you're not playing the market every day and looking for fluctuations in price, either to add to your position or to get out of a position, then the risks of small caps outweigh the benefits, in my opinion. Right now, I only hold one small cap to my name, and that is the famous Turtle Beach, ticker symbol HEAR. I'm getting crushed in Turtle Beach despite my bullish opinion. However, I wasn't dumb enough to put all my money into it. And right now, even with the price down, I am throwing a couple shares in here or there just to get cost basis down, but for the most part, I'm focused on my foundational plays, right? Things that are going down, but have the opportunity to bounce back even through a prolonged period of time. That's the key positions that I'm building right now. When I hit my criteria on those, then I might start poking around some smaller companies. But I can guarantee you that any small cap that I look to invest in at this point in the market will require extensive research and a significant prospect of upside that I can't pass up. We'll see what happens. Hope you guys enjoyed this. Please give me a like and subscribe. See you on the next video.